We'll go ahead and get started. Obviously, been a pretty busy week happening here in the markets. So I want to talk a couple of strategies with you guys here for today and go over some different things. Appreciate everybody being on the virtual who's able to attend. Appreciate y'all patience with me. Thank y'all very much. So we're gonna go ahead and get right into it. A couple of things that I always highlight and speak about, but I just want to kind of have a little refresher real quick. So you always want to pay attention to your top stocks that sit high asset allocation wise on the indice. So of course you got your QQQ, Nvidia, Apple, Microsoft, Amazon, right, which is sitting here at this current time. Been trading sideways on some of these tickers like Nvidia and Apple. Amazon, Microsoft has slipped. We'll touch on Microsoft in a second. And then, of course, you have as well, when you are watching and monitoring some of the other names, top of the NASDAQ, Walmart's actually made it and shot up. You got Google, Broadcom has slipped, MU has climbed. And then you hit the view all button. You got Netflix, Palantir, AMD, etc. on the outside looking in. So the biggest thing that I would stress when we do take a look at how many different corrections, I want to go to the charts really quickly. Corrections don't usually happen often. There are very slim times in history when we see corrections actually happen. Of course, with Nvidia being the top stock now, a correction is going to definitely matter based upon Nvidia's performance. If I line these two things up together, you look at the QQQ, you look at Nvidia, you look pretty much identically the same. So you're the same right now on Nvidia, and also you're the same here as well on QQQ. So both of these mirror each other directly, right? And so when you are taking a look here, specifically I'm on a monthly time frame, but I'm gonna knock it down to the weekly just so you can see things a little bit crystal clear. If you look at the Qs right now, we keep hitting back and forth. Same point. You want to watch this 574, because if we get underneath 574, that opens the door for us to drop down to 550. Also here on Nvidia, as I zoom in, and let me go to, I'm on a monthly, so let me go to the weekly time frame. Take you back to the week of September 8th. This is a key point to watch, because if you're looking at Nvidia right now at about 178 bucks, you're waiting for us to get down here below this 164. If we get below 164, that opens the door for us to pull back down all the way to the 150 area. So now you got both the NASDAQ, which we roughly estimated could fall anywhere in between on Qs $30 to $60 if we continue to shift downward. Now, of course, we know the only way that can happen is if Nvidia pulls back, and as well Apple. So if you're looking as well at Microsoft, this is key to pay attention to here with MSFT, right? So, hey. When you're looking at MSFT here on this daily time frame, Microsoft has recently made some lower lows. And as well, when I take it out to the weekly time frame, I said a couple weeks ago on my live, I said, hey, I think Microsoft will probably go back down to 350. I think his price was at maybe about $400 at the time. But you're looking for us to pull back all the way here to this April 14th low. So April 14th is something key to pay attention to. So I want y'all to watch that, right? April 14th low here on Microsoft, because if we break this level, now the NASDAQ starts to shift lower again. Now, in recent weeks, as I always tell people, but in the recent weeks, we've seen the VIX, which has pretty much remained above 20. You go to the daily time frame, the VIX has remained above 20 for the entire month of March. You go back to pretty much Friday, the last trading day of February. So for the entire month of March, the VIX has remained above 20. The VIX right now, a lot of people are, of course, pretty fearful because of some of the things that are happening in the Middle East. But as well, the market is going to shake those things off over time. So like, I don't look at the VIX being above 20 for too long, right? Eventually, the VIX is going to start to navigate its way back down below 20, and then the markets will start to go back upwards. But it's always key to pay attention to your top stocks, high asset allocation wise, because if those names start to pull back, that is where you see your overall index pull down. Now let's talk as well Meta Platforms, which Meta Platforms we know, formerly known as Facebook, but Meta is now down here to about 593. Let's illustrate the opportunity, because sometimes in the moment when the market is pulling back downward, we forget about these opportunities that we have in front of us. This right here is METU, which I want to encourage people to take a look at this chart. I'm going to zoom out real quick. So you kind of see the ebbs and the flows. This thing has been around for since 2024. But you notice like every time we come back to like 20, this 20 area, that's been the bounce point for METU. So if you're looking now, we peaked out here in February of 25. Meta sold off. April of 2025 dropped to $20. So you was actually able to get $20. You was able to buy this ETF, which is a 2x levered product. We only recommend these 2x levered products really after like major downturns. So no, I wouldn't recommend somebody to buy NVDL. I'm just using NVIDIA as an example. NVIDIA is still a stock that's relatively at an all-time high. So you want major pullbacks on these before going shopping. So if you look since the month of August of 2025, last year, we fell from $50 down here. So this ETF is down 50% during that same period, right? Let's just go back to, oops, not to the monthly. Go over here, go to the weekly. Perfect. We've came down from about 800 all the way to 600, essentially. So that's a 25% retracement. Now, if you look at Meta's chart, you don't really see 25% retracements like that, let alone even 50, 60. The few times in Meta's history having pullbacks have always been followed by the stock rallying back to the upside. So Meta's had maybe about 6 to 7 maybe pullbacks during its entire time being publicly traded. So really about 6 to 7 strong pullbacks. One in 2018. You had a little one, of course, February 2020. Of course, the 2021 to 2022 pullback. And you had a couple pullbacks from February, March of 2024, and same thing, February, March of 2025. And then funny enough, August up until February, March, we pull back again. So history rhymes. You know, you got an opportunity to get a world-class company at a nice discount, and you're trading its 2x levered instrument, which gives you access, you know, to that 2 times leverage. So I think that's very good. You know, I would love it, you know, at 15 to 20. I would really love it there. But I think you want to take advantage of it, you know, be sooner rather than later. You definitely want to take advantage of this sooner rather than later, because if a pullback does come, you know, it'll probably find a level and this thing will start to reverse out of that area. Yahoo Finance, of course, my number one place where I'm going and scouting these specific tickers, always to try to find a little bit of maybe an edge to kind of give us an idea of exactly what's happening. Particularly any of your stocks, you want to have them on your Yahoo Finance. So Yahoo Finance has recently made just a couple updates. Particularly on Yahoo, you have the opportunity to be able to see the news headlines by hitting view more. So to your right. So if you haven't been accustomed to that, this is a couple of key updates here. Now the rest have kind of stayed the same, but you also have your key statistics tab where you can take a look at your individual tickers as well too. So one thing that I ended up making note with is 2 things that I want to show you real quick. And we talked about this in the past few months, but it's the software trade, right? Software, cybersecurity. So you got ticker CRM, right? Ticker CRM. Pull that ticker up. And then you also have ticker Oracle. while I was on traveling today, I made a couple notes on each ticker. So I want to kind of cover exactly what I'm seeing on each specific stock. And then we're also going to pull up Snowflake after this. So particularly what I realized when I first started trading is that stocks within the same sector tend to trend together. So I want to show you something here, particularly on Oracle, how to use directly these trend lines. So I'm going to cut my levels back on real quick. So I take a trend line from the bottom and I could stretch it. So I use a diagonal trend line tool. So that's what I use specifically here on the right side of my screen with Oracle. What I did was I took the bottom here from February of 6th, Friday, February 6th. We're on a daily time frame, the 1 day time frame. So notice how price came and hit this on the 24th. And then as well, price just came and hit this here on the 25th. So the 24th of February, then you're looking here on the 25th of March here. Now look, price is about to go ahead and break this key level, right? So look, so now once I can get this break on Oracle, so I'm timing this up, and now I'm gonna go over here to the hourly and a 4-hour time frame, particularly here on CRM. So what I'll do is I'll take a trend line and I'll just draw my trend line. I'll take the most recent low, which is right there at 175. So now you have particularly here CRM, which made a lower low, made a lower high, and then made another lower low. So what I always try to get people to understand is after every lower low comes a lower high. Same thing here with Oracle is what you're seeing now. Lower low, lower high, then price has to come and break this previous low to make a lower low. So if you ever notice, like if the market opens up super red, I'm always telling you people to like, okay, don't be trying to go and buy puts or go short at open when the NASDAQ and the Dow and the S&P 500 are already red for the day. Don't go short when the market is already red. So you have these specific stocks that have all been selling over the past several months. And now some of them are coming down to good points where you're getting some good opportunities from a discount, not just from a price perspective, but really from a business perspective as well too. So I always look at stocks within the same sector to try to see if I can, kind of get it maybe a little bit of an edge. So that's a strategy that, can really work well for you as well. Now, I also want to talk about volume analysis with you guys here today. So being able to analyze volume. So every stock has an average 3-month volume that you can find here on Yahoo Finance. The average 3-month volume is always located right here. You'll see average with a dot and then volume, and then you'll see volume. So volume would be just your day by day, what was actually traded for that given day. And then your average volume will, of course, be within the past 3 months. So if you notice, Tesla today, since the market is now closed, right, you are actually able to see that Tesla TSLA, perfect. You look at this, now we pull, Tesla was only flat, pretty much flat for today, only moved $2, was only up $2 in total. The volume pretty much almost met the 3-month average. So by the stock actually almost hitting its 3-month average, it lets you know that the stock decently had a good amount of volume for that given day. So every day you should take a look at the tickers that you're specifically trading and kind of track and see, okay, exactly how much volume did they have. Another stock traded pretty much in line, right? You have CRM, which currently right now is $180 with a 23 P to E. So price to earnings is a great way to be able to evaluate, not the only way, but price to earnings is a great way to be able to go ahead and pretty much value your companies. P to E is an area that we touch on a lot when it comes to valuing a company to decide whether or not we believe it's at a good, fair price to pay. There's a lot of stocks that currently right now, 2 of the names we have, Oracle and as well CRM, both are in good spots for long-term investors to consider, hey, taking a piece and adding. So CRM has a 23 PDE. And then as well, Oracle has a P to E ratio. You're going to see it here now. So this is why they're recommended to start looking at potentially, if you're interested in these names, to start looking to long-term invest. What happens is a lot of times people see these names at all-time highs and they think that when everyone's talking about them, that's the time that you want to actually go ahead and buy. No, you want to wait until nice major pullbacks actually come and happen before you step your toe and you put your dollars into here. Now, you also look at the granddad of them all, which is Microsoft. Microsoft is really going to decide exactly how these individual companies are trading. So if MSFT is declining, what other stocks do you should you now be immediately thinking is going to decline to? Oracle, IBM, right? You're now looking at Salesforce to decline to, Snowflake, right? So you immediately group those tickers together and say, hey, if the big dog is pulling back down, what can I expect from the other ones? The same way we would look at NVIDIA. If you see NVIDIA pulling back, first things you're going to pull up is TSM, AMD. You're going to start pulling up those other semiconductor, AVGO. You're going to look at those other names and say, hey, are we seeing a sell set up on those particular companies, right? Same thing you would do with healthcare names, same thing you would do with banks, same thing you would do with industrials. So you would do that with all of those individual companies. So if I'm usually trading one name, I'm going to probably one name within the sector. I'm usually probably going to look to trade another name within the sector at the same time. So yeah. Now, a lot of people have asked me, I'm going through some of the questions that I've had. A lot of people have asked me specifically, what are my thoughts on Trump and the market manipulation? If you notice, Donald Trump is not going to let the stock market crash. He even is going to come in. He's going to lie. If he has to, he's going to lie. He says him and Iran are having conversations they did not have. The market shoots up on Monday. You wake up, the SPY was down to 642, 643. He lies. The SPY is back to 666, 667. By market open, is back to 655 to 656. So before the announcement, because we have the opportunity to be able to see the tape, right? You see billions of dollars coming in, right? On the long side, right before, of course, the announcement that he made, which ended up being inaccurate. But you notice how the market is still just chopping around. And this goes back to the asset allocation piece. We talked about the NASDAQ, but let's pull up the S&P 500, which is pretty much mirrors and is, basically the same thing, right? As far as holdings wise, but, just a little bit different because of the amount of companies. But the top three names don't change here. And you see that. And NVIDIA, Apple, Microsoft, Amazon, Google, AVGO, Meta, Tesla, Berkshire, JPM, right? So these same names. So until NVIDIA gets replaced, or until NVIDIA and Apple get replaced, because think about it, your top three names, two of them are sideways and one of them is declining, which is Microsoft, right? So there's really no way for the stock market to actually go upward. The path upward has to be NVIDIA breaking 200, Apple getting over 280, Microsoft turning around, coming back from 350, 370 and going back above 400 and going higher, Amazon staying above 200, going 250 north, Google staying above 300, going 350 north, Broadcom going 400 plus. So your path of the market moving up is really shown here. Now, there's been times throughout history where you see some of this sideways actions, particularly here on individual stocks or as well the indices. Now, the best thing that I always tell people to do, and I'll let that load up, is when the SPY is really trading sideways and the Qs are trading sideways, it's best to not really be overly aggressive on a trading side because we get caught up in thinking that what we saw 9 months ago is going to be the same trading action that we see here. You're not going to see the same trading action. Trading action is going to be different because now it's favoring the seller, because the longer that you're chopping around, right, when you're trading options, you have a time decay. So that time decay is eating away at your contracts. So the longer that the market is trading sideways, the less favorable it's going to be, right? For people who are acting, unless you're a scalper, right? You're getting in and out of positions daily, which is good. You know, you're scalping, you're taking, you know, the macro move that took place that day. And so this environment, this weather favors a scalper. This is going to favor as well a patient long-term investor as well too. So that's why I really doubled down as just telling people like, I put some notes even for myself, like when the market gets this choppy, it can be frustrating from the perspective of you're used to that consistent volatility, that consistent upward movement, but now it's paused. Now the market is choppy and you have some tickers that are declining and pulling back down. So with certain tickers coming back down, they're going back to areas where now there's levels of interest. So ZS, I didn't mention them, but I will do it now, even with our cybersecurity companies, same specific strategy as well that we want to take and do. So you have ticker ZS. See if it'll pull up. A little slow, but I can pull it up. I'm sure I'll probably pull it up on Yahoo. There we go. So let's take a look at the past year for ZS, right? Just to point this out. ZS fell from 350 all the way down here to 140. This is why knowing the fundamentals of a business before you put your money into a company is very, very, very important. Because ZS is still a loss-making business. Zscaler, even though I like them, they are a loss-making business. Now, this is the perfect time to be able to now look at, let me see, there we go. When you start to understand the fundamentals, things get a bit more crystal clear. You know, ZS has had pullbacks like this before. Oracle as well too. Go to the monthly. Oracle just hasn't had a pullback like this in a long time, but Oracle has had a pullback like this before. You got to go back to the .com era, year 2000. Oracle pulled back from $40, came down here to $7. Then by 2020, it was back to, so it took 17 years to get back to $50, right? Relative, $50. Now, it had a same pullback, right? Here, October of 2021, but then Oracle rallied, went from $58. By last year, it peaked out at 300 plus. We know what happened. So Oracle coming back now, we got to compare. This is the best way that I can explain it easily for people to understand it. Just keep it simple, not put a whole bunch of fancy verbiage out there, but just to keep it simple on both companies, right? So back in 2020, when Zscaler first broke over $100 and went to basically 380, pulled back to $80, which I personally think that now getting back down here to these areas is where you want to be a buyer at this, where price is showing you demand from previous areas. Now, same thing with Oracle, right? Where this was also the point in April of 2025 that we bounced. I still think that Oracle will end up going roughly down to anywhere between 100, 120, maybe even $80, right? If we're lucky, you don't always get perfect prices, but you want to pay attention to price behavior from previous times. This is how I'm able to scout, not just from a fundamental perspective, but also from a technical perspective, where price is going to reverse at in the future. Doesn't guarantee it, but gives you a good idea of where price is going to end up reversing. So I think that it's worth, based upon the way that I value these businesses, that it would be a good opportunity to get in Oracle at these levels and hold for long term. A lot of times when the market is trading sideways, you miss these opportunities because you're not clearly paying attention. You're so caught up in the market sideways movement. It's chopping around. You're so caught up in these little things, and then you miss the big opportunities, right? How many people can attest that they've missed big opportunities, long-term investing, chasing short-term trades? How many people can attest to that? You've missed long-term, clear-cut opportunities, chasing short-term trades, right? And so I want to now, because of the tools that we have, I even want to show Coinbase, right? And this is just how investor psychology goes, right? And this just gives you a good example. Let's use Kano, which is Coinbase's 2x levered ETF. Like, no, at this point, no one's worried about Bitcoin being a scam or Bitcoin not being successful long term. People understand the cycles. They know Bitcoin every 4 years is going to have halving. They know that 2 years after, Bitcoin's going to have a pullback. Go ahead.
You think the whole Epstein creation is not going to affect it long term?
I don't think it's going to affect it long term. I think that that's a hoax in itself. I think that was something, catchy to put beside it to say that he created it. Where's the proof? It's very speculation. There's a lot of speculative. It's very speculative to say that he created Bitcoin, right? I think what people do understand and know is that way before Bitcoin was what it is today, Bitcoin was always used for bad things, right? Like Bitcoin, I mean, just reality. Like we just can't, yeah, it was being used for murder for hire, drugs, and unfortunately, we understand what it was used for. Not saying it's right, but just saying that was the purpose of why it was even created in the first place. We're just keeping it all the way funky. So I don't think that he created it. I definitely think that he used it to try to hide his illegal activities, like many of others have. And go ahead. Yeah, so yeah, that's what it's used for. So, now since 2016, we've been better able to now have a better understanding of exactly how Bitcoin is going to trade. So if we're looking at Coinbase, which publicly traded company, we can evaluate this based upon its earnings. And now you have a tool like Kano, which is a good tool. Instead of me saying, okay, I'm only going to get exposure to Coinbase's regular, I'm going to wait until I believe Coinbase has found a true bottom or close to it. And Kano, which is right now at $7.67, let's show exactly how this instrument works. So Kano had a chance to bounce. Coinbase had a chance to bounce here in February, and so did Kano. Kano very quickly ended up go to the daily instead of the monthly. There we go. Kano ended up bouncing, went from $5 to $11 like that, right? So Coinbase came from 140 and went back to about 210, 215. But Kano, from a shares perspective, went from 5 to 11. So when I told people and say, yo, Kano, you want to buy this thing when it drops and hits $5. When people don't do it, then they're like, and it goes back to 11, everybody's like, oh my God, I missed it. But then when it pulls back again, people are upset. Oh man, it's pulling back. But this is the time when you buy when the market is pulling back downward and you're able to evaluate a company. So now you don't have just the individual company you could purchase. You can also purchase, right? It's 2x levered ETF. So we have price history here. So this is the third time that Coinbase has came and hit 140 and bounce. What does that tell me? The next time, if Coinbase pulls back down to 140, what's going to happen? It's either going to bounce again or it's going to break and really pull back further and come down lower. Because if it breaks underneath this level, that lets me know that sellers were able to break a major demand zone, because I have 1, 2, 3 points on the same chart where price actually ended up reversing. So if price breaks below this level, it's going to flush down here to 115 and come down further. Kano will probably be $2 to $3, and you'll be salivating at the gums to be able to pick that up. Go ahead, bro.
Whenever it pulls back on that second time, what's your time frame, or what's your price action that lets you know, okay, like this is going to stay, like this is the base for it? Like, is it like, do you go based on like a 1 hour, like doji, like a 4 hour, like?
Yeah, great question. So you're usually using a daily or weekly time frame, right? And usually the second time it goes back, it's creating a double bottom. So let me show you, let me explain this a little bit better. All right, because you're asking a good question. So remember, at the time when this happens, none of this exists yet. So consider that. So let me take that off. So at this point, what happens? First bottom here, second bottom here, double bottom. So now you're going to get a reversal out of that level, right? So where's my tools? Get my tool real quick, 1 second. So of course, we identify this as a key support, but now you have a DB, a double bottom pattern on the weekly time frame. So when the third time when Coinbase came here, what did that create? A triple bottom. So that's why coin ended up rallying recently, right? Because that was the third time it came back here. So now next time, if coin doesn't bounce here and doesn't make pretty much a quadruple bottom, it's going to end up breaking and pulling back further.
And then at that point, it's like
exactly. At that point, if sellers now take that control, and let me show you another good example, right? Because you're asking a good question. Let's go back to Zscaler real quick.
They had those double and triple bottoms.
Right. So let's look at ZS. So notice how when ZS broke below this previous point, notice how the selling accelerated. Started to see it come down. Now notice where we're at on ZS now. ZS is this dotted line right here. So now what's going to happen once it gets underneath this 134? It's going to flush down to 120. Exactly. But what people have to remember is during here, go to the daily. What comes after lower lows and lower highs? Right? You see me after a lower low, a lower high first before you break lower. So before you go lower, you break back higher, then you go lower again.
So you're big on like daily time frames.
Exactly. I'm big on daily. I'm big on the macro time frames because I want to see trends shift. Okay. Right? Macro. That's how you're going to catch a big move. What made me like this was only looking at the micros, and then you come back and be like, okay, I had the right trade, but not enough time.
Because I see you do be putting plays, and it's like contracts for a couple months out. I'm not used to trading like that. So
yeah.
Okay, so I
and the reason behind that is the philosophy is if I can catch something over a period of time, just instead of just catching it for a day. Yeah. Right. And also knowing exactly what's happening, trend shift as well, too. Right. There's been a lot of positions. I mean, hell, Oracle to Netflix to CRM to a lot of these names that I've highlighted coming down well in advance. And I was able to see it mainly because of these weekly time frames. So I could see even Microsoft, right? Seeing the shift in the weekly time frame and say, okay, how could I know that a stock that's at 400 is pulling back to 350? I'm taking a look at the relative weakness. As well, I'm looking at NVIDIA and as well Apple and saying, if NVIDIA breaks that 164, let's go to it real quick again, just to highlight that. If NVIDIA breaks that 164, it's going to be bad. It's not going to be easy for NVIDIA, right? If NVIDIA comes and gets below that September 5th, there's nothing that's going to stop it from getting down here to 157 and 152. Go ahead.
Your level want to be what, 170? Your level is at 160.
Yeah, so 174, 160, you got 168 right there. So yeah, and then 164. So right here, if I could see us get below this low from September, that's going to be picture perfect. For us, that's going to pull the NASDAQ. The only way for the NASDAQ to go into a correction is if NVIDIA pulls that back downward. So yeah. Yep. So you look at you go big, then you knock it down to the smaller to see in the micro what's actually happening. So you go macro first, micro second. Even on the name like Robinhood, right? Good company, but you pay attention to what sector it's in the trend structure. Now, if you're only looking, let's say, for example, you're only looking at the 30-minute time frame, you're missing a lot. You're not seeing everything that's happening macro. Let me go back to the daily. If you look on Robinhood actually right now is making a flag pattern. And it's not a bull flag, it's actually a bear flag. And bear flags usually happen the same thing the way bull flags happen. After long downward trends, instead of a long bullish, look at this. So now what does that tell me? If I can get Robinhood's behind to break this once, not once, 67. If I can get Robinhood to break through $67, straight drop down to 60. If I can get this trend to break, because all you did was go, if you pay attention, you went bear flag to breaking the bear flag, right? You went bear flag, break, down. Bear flag again. Notice last time it broke a bear flag. This was here in January. You had a long advance, a long decline, right? And then what happened? Price has been sideways trading since February. Not really moving up. It hasn't broken $85. So it hasn't broken the bear flag. So now if it breaks the bottom in here, it keeps testing this 60. Once it breaks $67, it's lights out.
So the way you trade this is either above 85 or under 67.
Exactly. Anything in between there, you're getting chopped. Okay. Exactly the point that I'm making. So that's why right now Robinhood isn't moving, because it's stuck in this flag. It's stuck in this trend.
So once it makes that move, that's like what, like a month long? Like once it makes a move, it's gonna make a move.
Correct. Exactly. Either way is once it breaks, it breaks. It breaks back over 85 or it breaks underneath 60, 67. Right? Obviously, it's closer to 67 now, but if it breaks underneath 67, it's going to flush. But this is the part where a lot of people get trapped in. The sideways movement. That's what I'm really speaking to, is like majority of stocks are trading sideways right now.
Last week on Meta.
Go ahead. Yeah.
The contracts were like crazy, man. Like
yeah.
Today I hit like a 60% play, but like the same movement that would have hit last week, like it would have happened.
Exactly, because you need that movement. Now, since you're talking about Meta, let's just pull it up. Oh, 1 second.
My next level I see on Meta is 586.
Yeah, I think that's the level that I have. Hold on.
And then I was thinking about 609 for like a big.
Yeah, it's definitely in that early 600. I think it's, for me, I think I have like 606 or 607. But
yeah, I have 603 and 607.
Yeah. So if you're looking at 100%, and then you said, what was that, 586, right?
Yeah, 586.
Yeah, 586.
27.
Yeah. So that's what we're looking for. We're looking for that 586 break. And so until you get that, you get a even like, for example, with Oracle, right? Same thing. You need a crystal clear break. Even with NVIDIA right now, that's why NVIDIA is like one day red, next day green. Yeah, like NVIDIA is not giving you no move. Yeah, it's just no need to trade it because it's trading within a range. Like I couldn't tell you the last time I traded NVIDIA, because it's not giving you no movement. It's too many shares outstanding, too slow of a move. Right. And it's the same thing as well with Apple too. Right. Apple is trading there sideways. So you're not having no move. Too high of a share count.
Once you get to those levels, if you enter the market, it moves so quick.
Yeah.
So let's say that Meta does come down to 586, right?
Mm-hmm.
What should I allow, or what should be my representation? Say, okay, this is going to continue. I wait for the end of that day.
Yeah.
Like that first time that it hit that 186, right? Wait at the end of the day to see, all right, that's a strong candle that close for that day, or like, you know what I'm saying? Like,
yeah. So good question that you're asking. So specifically, like with just individual stocks, you always want to be mindful of like anytime they're coming to a key support area. Like even for example, since I can't pull up Meta right now, but with Robinhood, like $67, be prepared for buyers to be there first, for there to be a reversal before a break lower, right? For price to probably reverse out of that level, then break downward. So anytime you have a key support level, expect buyers to step in first and then price to end up reversing after. So yeah, keep that in mind for sure. Really just price action to me is my number one thing, my number one indicator. I do use the 9 and the 21 EMA very occasionally. So I do like to use the 9 and the 21. Huh? Yeah, so the EMA. So basically, like the 200 is sometimes as well too. But yeah, I'm more of an EMA person, like exponential moving average. But to explain to answer your question about the 9 and the 21. So like a lot of times when you it's funny, the 9 and the 20, what am I? The 9 and the 21, it looks like they're trying to intersect. Yeah, so we crossed down on Nvidia on the 9 and the 21 on the daily time frame back in February. 9 and the 21 crossed on Robinhood as well. Go to the daily time frame real quick. There we go. This was December 15th. So anytime you see the 9 and the 21 intersect, I primarily look at it a lot of times on like the daily or the weekly. Momentum is shifted downward, or vice versa, shifted upward. So when you have a cross up, that means momentum is more. But the reason why I don't use it like that is because all these indicators lag price. Like, for example, Robinhood was already falling almost $30 before the 9 and the 21 crossed. So it's delayed. That's why I don't use indicators. Indicators a lot of times are delayed.
Let me make sure I got it. So
Then 21, 9 and 21 cross. That indicates a momentum change in the stock. That could be upward or downward. A momentum shift upward or a momentum shift downward on the 9 and the 21. So a lot of these stocks just have momentum shifts, like realistically downward on their macro level time frames. Even Meta as well too. Like if you look at Oracle, just to show you, the 9 and 21 crossed back in October. Oracle was almost basically $300 almost at that point and tanked. So if you just wanted to simply use that to in addition as well, 9 and the 21, this is why I say it lags, because of course Meta popped off of earnings, but then it came right back down, and the 9 and the 21 cross here on the 12th of February. So since then, it's nowhere near, right? So yeah. Text me, Chris.
What's the science behind that? Like, sometimes stocks have a hell of a earnings.
Mm-hmm.
You know, market opens up, boom, or pre-market is up, and then market closes. I mean, opens up, and it's just fucking crash.
You say like, what's the thing behind earnings pops?
Yeah, like you said, you beat earnings. It's like why?
Mhm.
Next couple days.
It really depends on what the stock a lot of times did before earnings too. Like, cause some stocks are running pre-earnings and then post-earnings is like a profit take. Sometimes guidance, just because a stock might have smashed earnings doesn't mean that the guidance for the next quarter may be good either, right? So people also like what I realized about earnings, that's where valuations really come into focus. People start to look and say, I got in here and this company is valued here now. And so that's where the big decisions are a lot of times made on earnings. Like, okay, I just heard the earnings report. What am I considering about this investment right now? So that definitely is just kind of, just my thoughts on it. Yeah. A couple people asking questions in the chat about names like NVO and HIMS. My personal opinion just on HIMS and NVO, right? It's like we went through a big weight loss drug surge, right? Like So I'm not going to say that these companies are not going to come back. It's just like, you got to remember, like when things are like very popular, when things are very, 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 very popular, eventually that popular button gets popped. And only way you can survive is being profitable on Wall Street consistently. You know, NVO to me, I think will be fine. I'm not saying, I never told people that I think NVO will go back to an all-time high, but I do think that they'll recover, right, over the next few years. But I also think that healthcare went through a major boom with the weight loss drugs, right? Like that was a real surge the past 5 years, right? I expect that to slow down. You know what I mean? Because I also look at, we don't know what the long-term side effects of those things are. Yeah. You don't know what the long-term side effects of those things are. So I think when you see when you see just certain sectors that have a surge, there always has to be an earnings justification. And that's the same thing with the semiconductor industry. The semiconductor industry is going through the same thing as well, right? Like, I mean, the countless of names in the semiconductor sector, the AVGOs, the TSMs, the NVIDIAs, all of these names have went up astronomically. Hell, NVIDIA's up 20x from 4 years ago. 20x. Just let that sink in. 20x from where it was 4 years ago. So eventually, I mean, I look at it, that's why I'm not, when I see that NVIDIA's trading sideways, I kind of really expect it. It's not a surprise because valuations come back into focus. So most companies on the stock market are overvalued. That's the reality. Most companies on the stock market are overvalued. But the stock market as well is a forward-thinking vehicle as well, too. So most investors are thinking, okay, what is this company going to be in the next 3 to 5 years? That's why I'm buying it. Not really because of what it's doing today. But when these companies end up still being far behind from where they should be, and they're already priced pretty much 3-4 years in the future, like majority of stocks are trading at levels that they shouldn't be trading at. They're trading at levels that they probably, won't make revenue or earnings up until, 2029 and 2030. So, yeah.
But you think about
You said what's the ticker?
ASST.
ASST. Let's take a look at it.
Because that was a stock that dad started off. It was a fin stock, and then we jumped up to like $11, and then it dropped down.
Mm-hmm.
And then it turned around, and then it did like kind of like a stock.
They did a stock split.
Yeah, stock split.
A reverse split, probably.
Yeah, a reverse stock split. It was
Yeah.
20-1, and then kind of the price went all the way to like 238 as it actually happened. How it's really like something.
Yeah.
But they call themselves a Bitcoin management company.
Mm.
And that stock right there, I been TFA with Tesla.
Yeah, the ARK ETF, we talk about that a lot. So here's the thing, as far as Strive, like I don't really invest in anything that's not really worth realistically like 10 billion or more. And this is the thing about these companies, like when you're a small, when you're super small, it's a lot of market manipulation too on names like this. So like the margins are definitely very bad on this. I can see that. You don't really have any revenue. You're losing $424 million in the past 12 months. You have a revenue of 5 million. It sets itself up, and I can see how it's squeezed because it has a short interest of about 18%. So this is a company that definitely would be targeted, right, very easily for a short squeeze. So I see that for sure. That's what probably ended up happening. Mm-hmm. That's definitely what ended up happening. So you had a short squeeze on this stock, and that's why this stock price ended up surging to the upside, temporarily, like it did. Yep. So this is what ended up happening. So you always gotta be careful with stocks like this. And that's why I always tell people the penny stock game is very highly manipulated because of this. Small amount of outstanding shares, high amount of short interest, and this is what ends up happening. So yeah.
Lawrence, do you mess with anything with the futures?
I don't trade futures at all. Yeah, I don't trade futures at all. So to go back to your point on the 9 and the 21 EMA, I want to show you this. So what you do is you go to indicators, and then you hit EMA. You get this one, that my cursor is on right now. Yeah, Sunny. That's the best EMA to have. So
I have an iPad system, on the iPad actually, so that.
yeah, so the 9 and 2 EMA, yep.
Seeing what was gonna happen was different to early.
Yep, the 9 and the 21. But this is the example that I wanted to show you. Like you see right now, you see how like Caterpillar already bounced. So I'm long cat right now. And if you look, it crossed here on the 6th of March, but notice like cat was already pulling back, right? And now you're about to see this price actually come back and intersect, right? So that's why, like I use, of course, my support. I think I got in Caterpillar at like 690. It dropped a little, but not worried about it because I do think that the Dow Jones is gonna come back and resurge first. So yeah, that was my main thing. So with Cat, yeah, we're at like 717 right now. So up a little bit. Someone asked me what a short squeeze is. So yeah, essentially really what a short squeeze is, pretty simple to explain, is like you'll have these companies that people are placing massive bets against because they believe that whether the company's unprofitable, whether they believe the stock's going to go out of business, it's a multitude of reasons why someone might be shorting a company. They don't believe that it's at a fair valuation. Just throwing out different examples as to why someone was short. So they go and they go to the broker, they go to the broker and they borrow the shares at a set price. But if that stock goes above that price by too much, they have to cover. So the short squeeze is basically the shorts getting squeezed out of their position. So in order for them to get out, they have to cover, which means they have to purchase the stock. So now they're purchasing the stock and the stock price is going to be pushed up, plus retail investors are purchasing it because of whatever hype that may be behind it. And that's what causes the squeeze. Now the stock price has a huge amount of influx of buying. And it's really like, you want to look at it as like a short squeeze is like essentially artificial buying. It doesn't hold. You see a lot of times companies get short squeezed and then get shot right back down. Prime example last year was OKLO. OKLO was a big time stock that a lot of people were pushing. And I told people that OKLO was trash. And OKLO went to almost $200 a share. It's currently at 55. So it's down 75%. It's still a loss-making business, but what happened was a lot of people were caught shorting this individual name. Anytime a stock has anywhere over 10%, that is a lot. Now, this name last year had well more than 12%. It was in the 20% last year. So what does that tell you? That the amount of people shorting it has came down. As you know, why? Because the stock price shot up. So a lot of those people got cooked. So short squeezes happen pretty often. Tesla was a stock that added a lot of market cap because of shorts. back in 2020, Tesla at that time caused short sellers to lose the most money ever. So that's how Elon's stock actually got to being $1 trillion. That first time when Tesla hit $1 trillion in market cap was mainly because of short covering. So many people were betting against Tesla because they didn't like Elon Musk, etc. And Elon Musk pretty much told them to F off. And they kept shorting his stock. And as they shorted and added those shorts, people, Tesla fanboys, kept buying, and the stock price kept shooting up because the shorts had to cover. Mm-hmm. So Tesla, go ahead.
What are your thoughts on SpaceX then? They're supposed to IPO what next month or something?
Yeah, I mean, my thoughts on SpaceX is it's going to be heavily shorted too. But it's going to shoot up because the Tesla fanboy is going to buy it.
So you think it'll like open up, probably retrace?
I think the first day that SpaceX opens up, it's probably going to be that thing is probably going to be blasting like it's not going to be no options though because options don't come until after day 5.
Oh, really?
Yeah. Options don't happen. Yeah, options don't. So yeah. Yeah, but it's going definitely SpaceX is going to be jumping off the chain. I predict probably a short correction, and then it'll probably be jumping again. Mm-hmm. Yep.
And you got any specific stock that you really like for this year specifically?
Yeah, I have a couple individual names. I like Rubric, RBRK. I like Rubric though at like $30. It's getting there. It's at 47. I get excited. Definitely.
And you trade IPOs on your
So you can't trade IPOs on just regular individuals for like regular individual stocks. You can't get them on like just TD Ameritrade, but there's a lot of different platforms if you have the capabilities to be able to get IPOs now, pre-IPOs. Yeah.
I use so
Yeah. Say that again. Webull, yeah. So Webull, yeah, you can't buy anything pre or so far, but good platforms for sure.
The IPOs and stuff like they're some.
Yeah, as far as getting into them pre, you got to go through different avenues. But yeah. SoFi, speaking of SoFi, you want to get that at $10 stock wise.
Yeah, SoFi.
Yeah, SoFi definitely, as it's pulling back down, it's just going through a correction. You want to get that, in those levels. I also think as well, moving it. I like CEG as well, Constellation Energy Corp. CEG is a name that I think that people do want to get some exposure into. I think data centers, with all these data centers that are being built, you want to get as much energy stocks as possible. Energy and industrials. Those are 2 sectors. Energy and industrials. That's what's going to take. I'm still very bullish on Caterpillar. Very, very bullish on Caterpillar. You guys seen the move last year. I told people that Caterpillar would be here. Caterpillar would be $1,000 company. You just wait on it.
You know the ticker for that by any chance?
For what?
For Caterpillar?
CAT. CAT. And then you have CEG, which I have on the board right now. CEG. Then you got some good old, like, it's still as well with the semiconductor trade. I don't believe it's over yet. ASML, which is going to end up going to $2,000. It's currently at $1,400. $2,000 is on the horizon though. This is a low floater stock. So it's not a high float, it's very low. They'll probably do a split maybe after they hit 2,000, but you only have, you have a low amount of outstanding shares on this. Very low. It's a very low amount of outstanding shares.
Lawrence, I know you like to trade like longer term option. And with the whole decay, I've never really been able to swing that way. I've been successful a couple of times. I like to day trade, but when it comes to those longer trades like that, man, like how do you narrow it down to a certain amount of time that you're gonna buy that contract out? I mean, what gives you conviction to say, all right, 2 months, 3 months?
Yeah, it really depends on the amount of like, because not every trade are you planning to hold. You're never planning to hold that trade that long. But I think it depends on the setup and the time frame that you see. If I see something on a 4 hour or the daily time frame, it's very easy to put 2 to 3 months and say, okay, I know I'll probably be out of this within the next week or two, right? But if I don't really trade a lot of leaps. The reason why I don't trade a lot of leaps is because to me, you're paying so much money. Yes, you get time, but also you have to factor in the time decay. Because there's a lot of times you might be buying leaps and you don't have, even during that time you have on it, the move don't happen. It trades sideways. That's why I love the fact that we have these leverage products more, right? Like I would prefer someone to get Coinbase's Kano versus buying a leap on Coinbase. You get what I'm saying? Because who knows if Coinbase is going to turn around next year? It may be 2 years. So if you got a 1 year leap, you're going to lose on that contract. But if I get Kano shares at $2, $3, $4, $5, whatever, if Coinbase goes back up to $200, $300 and Kano's in the 20s, 30s again, and I got it at $5, $6, even $7 or 2, 3, 4, wherever I got it, I'm going to make money, right? So I would prefer people to get the leverage product now that you have that over getting a leap. I prefer the leverage, and it's worked out well. I mean, the countless of leverage names that we've bought and, you know, we've been able to be successful. The AMDLs to the SOXLs to, I mean, AMDL we bought at $3 and AMDL went to 20 something bucks.
And on those, you cannot buy contracts. It's just equity.
You can buy contracts on it. I wouldn't recommend it though.
Okay.
Not to say that it'd be the worst thing. I just don't recommend. I would just say get the shares and just let time do the work.
Okay.
And I think from an investor psychology is like when I talk to a lot of people, I'm like, you got to understand time is your friend. Let time do the work. Like also, you're not going to be perfect either. You know, it's going to be sometimes you're going to get the perfect entry, but other times you're not. But you scraping over $2, $3, you're going to miss the whole move.
Yeah.
You know, that's kind of my philosophy on it. Let time do the work. Some things happen faster than others. Of course, we wish everything we bought this week would pan out maybe next month, but that's not the way it works. So yeah, definitely not the way it works. For sure, man. For sure, bro. It's crazy, man. We ain't seen each other in a long time. Yeah, we known each other 15 years. Middle school, 6th grade, acting a fool. To 26 and
You grew up here?
nah, I grew up actually, me and Mo, I grew up in Georgia. Yeah.
Oh, okay. You live here now?
Yeah, I've been
Yeah.
here for the last 5 years. So I really live like maybe 5 minutes away from work. So he told me it was fine. And I just got from work.
Yeah, I would make it early.
For sure.
Definitely.
Definitely, bro. Definitely. Let's flick up. All right, great people that joined us. We're gonna wrap this thing up. Appreciate y'all.